Hello, I'm Mike Graham, president of Midwestern Securities and the host of the Banking on Growth podcast. With us today is our friend Sam Viardo, who is the CEO of Technology Advisors. Welcome, Sam. Thanks for being with us today.
Thank you for having me on the show.
Yeah, I'm excited for our conversation. Will you tell our listeners a little bit about yourself and your company and your background? It's very interesting.
Sure. We have a consulting company. I own a consulting company and a software company, and the software company helps us connect bank cores to Creatio, which is a low-code development environment, and we specifically built that for banks and credit unions. So we go in and help banks, credit unions improve their processes and automate different types of tasks, particularly things like giving access to a 360 view of the customer.
I'm not a tech guy, so that's how this conversation is going to go. I may be asking some very rudimentary questions. So are you talking about a CRM specifically?
Yes, we're talking about a CRM specifically. That we've taken a CRM and we've added all the things that banks would want to see in that CRM, such as we have accounts, which are really now been named companies, and we have financial accounts, and we have households, and we have referrals, and all the things that you would want to do as a bank. We've crafted that into a CRM, so it becomes a CRM. It looks like a CRM specifically for banking.
All right, thank you. So we're going to have to keep it real low tech for me here. So again, low tech as an overview, what are the key areas where CRMs can help community financial institutions?
Sure. The most common things I see are onboarding of new customers. So there would be a behind the scenes process that would make sure that all the steps are being followed for onboarding a new customer. We would be able to measure a customer satisfaction as well using a CRM. Referral management would be another area where we would manage when a referral comes in, we track it, make sure it's getting timely responses back to the customer. And then probably the next one I see after that is next best offer. So that case, next best offer would look at all the information that it has about who buys and what pattern they buy in, and would make suggestions back to what is the next product that the bank should be offering this customer.
Again, with my limited background around technology. So somebody comes into the bank and opens an account or applies for a loan. They get into the core system. They get entered in. Is this a duplicate entry that staff needs to be trained and also go into this, or does it automatically get into the CRM?
So there's a couple ways we actually do it, but the best way to do it is actually have the customer apply and have that put in the CRM, and have the CRM then put it in the core.
Okay.
Again, it changes based on what our customers' policies are and what their security plans are. So it could go in the core, and then the core would move it to the CRM. Either way, but they'd only enter it once.
Okay. So one of the things you mentioned, the next best offer, and looking at patterns in AI.
Yeah.
Do you mind elaborating on that?
Sure. There's a lot of different types of AI. So let's start with that. And the type of AI that next best offer fits in is called supervised learning. So what that means is that the AI has the ability to learn by looking at data and patterns. And so it will would take your historical transactions of your customer base, and it would look at what products they have and what products they bought next historically. And therefore it would develop a profile of a customer, and it could be things that we're not thinking about that it's looking at, since it can look at everything all at once. So it could be based on the person's job title and their age. This is the best offer. Or it could be based on where they live in the community. That could be the best offer. but it will come up with it'll use a technology called regression analysis, and it will actually figure out what, based on a profile that it creates, it would come back with the next best offer for that person based on all the history you have.
Sam, is all the history, is that basically, auto bill pay, debit card transactions, dividend checks coming in from Edward Jones brokerage account, all of that stuff?
All of that stuff would be considered, yeah, and it would happen pretty quickly.
Interesting.
So you need a few months of history for it to start learning. So if you can't go back in time, then you would turn on that tool and have it monitor your transactions, and it would then build that pattern up, and there would be a level of accuracy that would go along with it. So we would probably, if you didn't have a historical information available, we would just turn on day one, and in about 4 months, it would be able to give you accurate predictions. Yeah, but most people have a lot of history, so we just feed it all the history you have, and then on day one, it literally has the ability to give you the best offer.
Interesting. What percent of community financial institutions are utilizing something like this?
So it's not the first thing they turn on. I will be honest. It's something that we always recommend starting by creating what I call a minimally viable solution. So we try to just go out and solve one problem. And it's typically things like referrals, or making sure the call center is working well, or marketing. A lot of times we can look at information about the profile of the person and have different types of marketing activities automated. And so those are usually one of the first things that gets turned on. But eventually along the line, somewhere in there, next best offer is one of those things. And it's probably 6 to 9 months into your implementation, you'll want that feature available.
Okay. I hope to come back to that in a few minutes with you.
Okay. Yeah.
This is really interesting. So banks adopt the CRM, and then they want to implement it. Of course, you don't want it just sitting on the shelf. What are some common challenges banks face during the client onboarding process, and how can a CRM system help address these issues?
Yeah. So some of the things that we find is that when you're implementing CRM, you need to have well-defined and documented processes. So sometimes we find that the processes are clearly defined or documented. Other times, this is your opportunity to change those processes and document those processes. So one of the challenges we find as an implementer is the project typically starts so that people retrospectively think about, well, what is our customer onboarding process? Because now we're going to be implementing and documenting it. Or what is our referral process, or what it should be? And this gets a great opportunity for them to change it. So we see that is something that gets changed a lot in the early planning stages. So I would say the biggest challenge for us is the time it takes for challenges. The time it takes to do the documentation is usually longer than the time it takes to actually build the system once everything has been decided. But the things that customers solve right away, number one is, like I said, customer onboarding can be really very well done. And marketing campaigns, very targeted marketing campaigns. CRM does a great job. So inviting people to live events in the community, giving them, 1 year, interest-free credit cards or whatever, those types of targeted things can be, we'll develop a profile of every person, the system will, and we can determine which campaign would be the best campaign on a person by person level. So you're no longer shotgunning or marketing and using the same campaign for everybody. You're actually finally cutting that campaign based on the profile of the person that you're working with.
Interesting. So I can see it helps better communication with with these customers, how much of it is manual. We've got to have good data in there in the first place, as far as the banks need to create maybe something called a persona or something like a persona.
Correct.
We have that. So when they open an account, the people need to be trained, and we have to have fields of how they'd want to slice and dice the data to communicate and to market to these customers.
Right. And some of that can be done by, you give them something, and then you ask for something. So you can literally send an email to somebody very specifically, giving them something they want, like here's information about a potential loan. Oh, and by the way, can you confirm your address? Here's your address. Can you confirm that's your current address? And so as part of your marketing campaign, a lot of people, if it takes one click, they'll do it. And so you can slowly clean your data by doing it that way.
One thing that we've been talking a lot about at Midwestern Securities, and we're going to talk all year about, is this concept of customer journey mapping.
Mm-hmm.
Are you familiar with this?
I am, yeah.
So for our audience, customer journey mapping is basically, I'll call it dwelling collaboratively with other people and other data inside of your institution around your customers. So really understanding who your customers are and understanding how you're helping them. And then if you understand that, you understand how you're not currently helping them, and building a map to basically round out the products and services to help improve that customer's financial experience as much as possible, gain as much of the wallet share inside of your financial institution as possible, thereby keeping competition out. So everybody gets a better experience. The customer gets a better experience. The bank has a more profitable relationship, and hopefully a stickier customer when it's all said and done. And that requires intentionality, right? We're going to spend time dwelling on this. We're going to be able to get good data. And it's more than just an upsell or cross-sell or another transaction with customers.
Yeah, no, it's critical too that you also evaluate the experience of each step in the journey, because I find it insightful to ask people, if they're taking a particular step, like filling out a form, to ask just your team to say, do you think this is a positive experience for the customer? Is it a neutral experience for the customer, or is it a negative experience for the customer? Because if you can remove all the negative experiences and only have positive and neutral experiences, then you're going to have a very happy customer at the end of the day.
Do you see very, very many banks utilizing the CRM well, like we're talking about, and then really doing things like this customer journey mapping?
Yeah, again, it becomes something that gets done almost immediately for our customers. So we're going to ask them things like, the first part is, of course, documenting the processes you have, right? And then you're looking for gaps in the processes, gaps in the products, and so on. And so but by implementing CRM, you're getting a lot of the information you'd have to do to complete a customer journey map. And so it becomes something of a next step. Once you got your basic CRM up and running and all your core processes documented, you can now look at them and determine, which ones are missing and complete your customer journey. The nice part about that is once that's done, you can then look at each step in the journey and do the experience analysis and really improve the customer experience, which will, happy customers don't leave.
Right. Yeah, that's a great perspective. What challenges do community banks typically have tracking and managing referrals? And I think that, I think that, again, just referrals that can be transactional, right? It can be you get paid, you send somebody over, you put a note in the CRM, you send a to-do or a task. It's different than really dwelling in mapping that customer experience. But what are some of the hurdles that banks face?
Well, I think without a CRM, it's like a bad handoff in football. It's unclear whether you're going to recover that ball or not. And customers don't like to be ignored. They don't like to have to do some things twice. So what CRM provides, first of all, is a traceability of that referral. We have customers who say that if I'm the person who gets the lead or the referral is the owner of the referral, and at the end of the day, they have to validate that referral's been followed up on, and that can be done as a dashboard. But there's also executive level things. So let's say you're finding out that let's say we're monitoring payments streams, and you find out that someone's going to be having insurance on their motorcycle. Maybe they might want a motorcycle loan. That could be an automated referral that's sent off to the loan department or somebody to check up on that one customer. And that gives you the level of traceability that you can see that where that's gone and how quickly it's being done. And you can also set triggers that say, this referral needs to be completed in 5 days. And if it isn't, alert people. So, because sometimes they get stuck, right? It goes to a department, someone's on vacation, they don't look at it for a week. You really want to pull that back and hand it to somebody else. Well, you can build that into your processes.
So back to your motorcycle story. So it could be built in that somebody applies for a motorcycle loan,
right?
And if the bank owns an insurance agency, that they automatically get a referral. We just did this loan. You should call them and see if you can give them a quote on their insurance.
Exactly. Or if they get a loan from, let's say you're getting a referral from a car dealer, right? You want to make sure that customer, if they're not already your customer, you want to make sure they're sticky as possible. So you can recommend a bunch of things to them, particularly like car insurance, if you have, again, an insurance group that you're working with. But you can offer them at this point, automatic free checking accounts. You can offer them credit cards to help with the auto payments loan, so that they don't leave you in 3 months or 5 months and take it off to their own bank. Right? That's how I see the automated technology working, is putting them through very focused marketing campaigns, having processes that understand, when customers want to leave, right? You have to have what are the reasons for leaving, and can work to prevent those from happening.
So in a loan officer situation, say a small business comes in and they renew their line of credit. That loan officer would be interacting through the CRM, hopefully, which integrates with the core processor, and that renewal of line of credit could potentially trigger a referral to the financial advisor saying, do we have their employer-sponsored retirement plan?
Right. Or do I have a wealth management team, right?
Right.
And is he working with the wealth management team, or wealth management folk? So
so it removes the personality potentially, and removes the territorialness that this is my customer and I'm not going to share. It just becomes an automated process. This is how we do it in our institution.
Correct. Right behind the scenes.
Yeah. And then the supervisor ends up with a dashboard showing how many were sent and how many were followed up and how quickly
they were followed up. And if there are any that are out there too long, they're in danger, or, because obviously if they're and if also you can prioritize them based on their value to you. Right. So, this is a high wealth individual who's got his business and his personal money with us and loans with us. Maybe we want to, respond to him in 1 hour, where this is a person who only has a credit card with us. Maybe we want to respond to him in 8 hours. You can start doing stuff like that.
Sure. So it basically solves how customer-facing employees know. They don't really have to know. We create rules of which products and services that we might want to put in front of these folks. And it gets delivered they get a bell or something on their desktop, and they know what they need to follow up and when and how.
Right. The system would, provide them with a list of things they need to get done today, right? Based on priorities and processes that you have. And, it's literally like clicking on an item on the list and having them complete that task. And a lot of the tasks, in fact, will be automated. Like we see loans originate a lot of times not in the LOS, but actually in the CRM. And the CRM then talks to the loan system and provides it all the information it needs to process that loan. And if it doesn't have enough information, then the pieces it doesn't have, will be pushed back to the person who's the loan officer to get that information.
Mm-hmm.
I had a personal bad experience with getting a loan a couple of years ago, where I changed homes, which I hadn't done in 40 years, to something smaller. And I didn't realize that, I was always certified for a certain dollar amount, even though I was paying cash for the new place. I still had to have a loan, and we had to keep coming back to me over and over and over, asking for pieces of information. And after a while, it sort of got gritty, like, why couldn't you have asked me all this stuff at one time? And so that's the type of things that a really solid CRM can help with.
Sure. Reducing that not in good order paperwork.
Right.
It gets pushed through in good order, or there's the client can't move forward to the next page.
Right.
Yeah. This is great. This is very, very interesting. So a lot of the struggle, I think a lot of community financial institutions are often a version of a small business, right? And everybody's got lots on their plate. They're going lots of different directions. Sometimes the bank president might also be a loan officer, right? Sometimes the loan officer might also be doing farm management. It can be all over the place. So this is a great way to really maximize opportunities, minimize that handoff getting fumbled, customers falling through the cracks. And do you have any data of banks that use a CRM like you're talking about, products per household versus institutions that don't?
I don't, but one of our credit unions, they did do an ROI analysis. After implementing CRM in less than 4 years, they doubled their size. They're right now 11 billion, and we started working with them. They were about 5 billion in assets. So CRM really supercharged the growth for them.
Sure. No, I really like it. When I've thought about customer journey mapping, I've thought about the financial advisor, the loan officer, the new accounts people getting in a room, coming back to customers who they have relationships with, going through customer data points. And I really envisioned it to require much more kind of human capital and thoughtfulness, and be a potentially slower process. But if you have the human capital, if you have the buy-in, if you have the intentionality with this data that you can have through the CRM like you're talking about, you can really ramp it up a lot faster than I was imagining.
Yeah, the biggest challenge when defining your customer journey is the exceptions to the journey. He's the brother-in-law of our largest customer and he wants a loan. Maybe we're going to have to shortcut the process a bit. Maybe we don't for audit reasons, but maybe we do. And those exceptions, that type of exception analysis is something everyone forgets to do. So it'll be like everyone will say, "What's the perfect process?" And then someone has to say, "Well, do we ever shortcut this process? Is there any reason why we would shortcut this process?" If the answer is no, then great, you move on. But if the answer is yes, then you have to look at those cases individually and decide, is that a good reason for shortcutting it? Number one, it may not be, right? May be wrong that you do it. But the second thing is then you have to build that into the process itself. And so those become potentially questions as the process is kicking off.
It's good. In your business, you consult, you help people think through these things so they don't have to learn from their own mistakes. They can learn from somebody else's.
Right. And a lot of times we have a lot of them built already for, the collective knowledge of doing this for 20 or so banks in the last 3.5 years, just thinking about the last 3.5 year window. We probably have most of these processes built or are familiar with at least.
Interesting. How long does it take for a financial institution to get good at this, to build it and adopt it, and see it kind of as, our normal process, our operating procedures and habits?
Yeah, it depends a little bit on how much time your folks can spare, because the beginning part of it is time intensive, in the sense that, it's literally walking through all the processes you have in the organization, talking about what your visions for how you want to transform your bank, talking about prioritizing them in such a way that this is something we must do, but this is something we should do, and this is something we could do, and these are things we won't do, and sort of packaging that up in that way, framing it like that, and then the musts get done first, right? And that becomes what we call a lot of people call phase one, we call it the MVP, minimally viable product. And so that at that point there, then you can look at the should do's and start deciding, do I need to do all these? Again, you go through this process. Now that I've got all the musts, should I do all the shoulds, or which? And what we do is we do it by ROI. What of these things here have the highest payback value to us, right? And those are the ones. Then you push those into the next phase, and you keep that process going until you feel you've got everything covered. And while this is happening, we don't do all the work. We will train your IT department or your business analyst to do that work, so that at some point in the process, we're coaching and you're doing the work, but we start out, we're doing the work, and we're asking you for insights into your, using McDonald's analogy, the special sauce for your community bank, right?
Sure.
So we want to incorporate that special sauce, but later on, we don't have enough people to do that for everybody. What we do is we then move our role into the coaches, and we have a lot of clients who just will have a 1 hour weekly meeting or 1 hour meeting twice a month and say, we're thinking about doing this. How would you approach that? And we would give them our opinion on how to approach that. And then they do it, because these products are really very easy once you get to know them.
Sure. Well, they sound super effective. And I can see how the credit union you were talking about doubled that rapidly. And I would guess more than just doubled their deposits, but probably there was probably exponential growth to their non-interest income. If they're getting to the point that you were laying out at the beginning of the next best offer, and if the credit union had good other exciting things to offer, like tax preparation, insurance, investments, these other non-interest income sources, that there can be a very big flywheel effect spinning off great discussions with customers that they see insurance premiums going out and dividend checks coming in, all of those things that AI could be trained to identify and send those leads.
Yeah, and what's great about it also is, in their specific case, but we see this in a lot of organizations, different things like the AI and the automated processes save time.
Mm-hmm.
And so a lot of times growth is held back by the number of employees you have. But if you can make the employees considerably more efficient, then they have room to do more work. And that also contributes to the growth of the organization itself.
True. Thanks for pointing that out. Are there other things that we've missed that we should point out in our limited time together today?
No, we covered a lot, I think.
We did. We did. It's been really good. Sam, for our listeners, what's the best way for them to learn more about you and your companies?
Sure. You can find me on LinkedIn, Sam Viardo. I'm the only one. Last Viardo spelled B-I-A-R-D-O. But my company is Technology Advisors. Tech ADV is our URL.com, techadv.com. And that you can find me off of there.
Okay, awesome. Well, this has been great. I really appreciate your time. I want to get to know more about you and your businesses and have future conversations. I think what you're doing is really important, can be really impactful, and I'm excited about it. So again, thank you for being here. And on behalf of all of us at Midwestern Securities and Banking on Growth, to you and our listeners, thank you for tuning in. And we look forward to our next discussion together.
This has been another insightful journey with Banking on Growth with Michael Graham and Midwestern Securities, a member of FINRA and SIPC. We appreciate your time. If you found value in today's discussion, consider subscribing for more thought-provoking discussions in the world of finance. Your support helps us continue to bring you quality insights. If you have a topic you'd like us to consider covering or have thoughts on one of our episodes, we'd love to hear it. Just email us at media@midwesternsecurities.com. Remember, the power to grow is within you. Thank you for being a part of the Midwestern Securities community. Until next time, stay inspired and keep banking on growth.